All right, let's talk about AppLovin. We're going to break down their absolutely wild 2025 financial results. Seriously, the numbers they just put out are making some serious waves, and you're about to see why. Let's just jump right into it. Okay, check this out. 70%. That's the first number I want you to see. That's how much their revenue grew for the entire year. I mean, that's not just good, that's explosive. So the big question is, how on earth did they do that? Let's dig in. So first things first, let's look at that top line growth. To really get a feel for what 70% growth actually looks like, we have to talk about the total revenue. And trust me, these numbers are huge, record-breaking, in fact. For the whole year, the company brought in a staggering $5.48 billion in revenue. Just to put that into perspective, we're talking about a scale that puts them right up there with some major players in tech. But you know what's really wild? It's not just the total amount, it's how fast they got there. This chart really tells the story. Look at this. In 2024, revenue was sitting at just over $3.2 billion. Fast forward 1 year, and boom, it skyrockets to almost $5.5 billion. That's more than a $2 billion jump in a single year. That is what you call a breakout performance. Now, as amazing as that revenue growth is, it's really only half the story. Because what's the point of making all that money if you aren't actually keeping more of it, right? Well, AppLovin's profitability didn't just keep up, it actually outpaced their revenue growth. Get ready for this one. 111%. No, you heard that right, that's not a typo. Their net income, we're talking pure profit here, more than doubled in just 1 year. And this is huge because it shows they're not just growing by throwing money around. Nope, their business is getting fundamentally more profitable as it gets bigger. So that 111% growth translates to this absolutely massive number, over $3.3 billion in net income for the year. This is the kind of performance that makes the entire market sit up and take notice. So how in the world did they pull this off? And that brings us to our next point, efficiency. We've seen how much money they made. Now let's look at how they made it. This is where the story gets even better, and it all revolves around this key metric called adjusted EBITDA. Okay, before we see the number, let's do a quick sidebar on what this actually means. Adjusted EBITDA is basically a way to measure a company's core operational profit. You strip out stuff like taxes and interests to get a really clean look at how the actual business is doing. It's a go-to metric for checking a company's financial health. And AppLovin's number here is just incredible, $4.5 billion for the year. That's an 87% jump from 2024. This number just screams strength in their core business. And here's the kicker. They think they can keep this up. Looking ahead to the start of 2026, they're forecasting a margin of around 84%. Let that sink in. For every single dollar they bring in, they expect to keep about 84 cents as core profit. That level of efficiency is just, wow, you just don't see that very often in any industry. Okay, so we've established AppLovin is a growth and profit machine, but a big question is, what does a company actually do with all that cash it's making? And that brings us to our next section, their capital strategy. Their plan is actually pretty simple. Step 1, make a ton of cash. Check, we've seen they're pretty good at that. And step 2, use that cash to directly reward the people who own the company, the shareholders. So let's look at step 1. Generating cash. In 2025, AppLovin produced nearly $4 billion in free cash flow. Just think of that as the pile of cash they have left over after paying all the bills and making all the necessary investments. It's their real financial firepower. You know, free cash flow is such a critical sign of a company's health. It's the flexible money they can use to invest, pay down debt, or, like we're about to see, give right back to shareholders. A number this big just tells you the business is incredibly healthy and self-sufficient. So what did they do with all that cash? Well, a huge chunk of it, we're talking over $2.5 billion, went directly to buying back their own stock. And when they do that, it reduces the number of shares out there, which can boost the value of the ones that are left. It's a direct reward to their investors. So that's the look back at an incredible 2025. But what about the future? Well, if you look at the company's own forecast, they're feeling pretty confident this momentum is going to continue. Their official guidance for the first quarter of 2026 shows zero signs of slowing down. They're projecting revenue could be as high as $1.775 billion, with adjusted EBITDA getting close to $1.5 billion. This forecast basically says that the powerhouse we just saw is expected to keep running at full steam. So when you put it all together, the insane revenue, the crazy profits, and the super confident outlook, it really boils down to one big question. When you see a company firing on all cylinders like this, I mean, the growth, the profits, the whole shebang, you gotta wonder, right? Is this just a one-off, a flash in the pan? Or is AppLovin actually setting a brand new standard for the entire tech industry? Something to think about.